Hello and welcome to the Killik & Co podcast for Thursday the 13th of April. This week has been all about geopolitical issues and the impact that these have had on the markets. This follows the US airstrike on Syria over the past week, as well as comments by President Donald Trump that they are prepared to take on North Korea alone. This has been followed up by the sailing of a US carrier group to the Korean Peninsula. North Korea has responded with comments that it has its nuclear site trained on US invasionary bases in South Korea and the Pacific theatre, as well as on mainland US. The impact of this on the market has seen volatility spike as measured by the VIX index, and this is now at the highest level since the US elections. The geopolitical tensions have also seen the oil price bouncing up from recent low levels. There's also been a flight to safe haven assets, with the gold price also up over the past week and close to 5 months highs. We've also seen US 10-year rates hitting a 5-month low, both over the geopolitical fears, as well as some comments coming out of the US government as well. In terms of the impact on equity markets, we've seen the US market underperform other markets, and one of the sectors that has been worst hit has been the US bank sector, both driven by the flattening of the yield curve, as expectations remain that the Fed will continue to tighten monetary policy, and has seen longer dated yields decline as well. There also remain doubts over President Trump's ability to fulfill his campaign pledges around reducing tax rates and lightening bank regulation following his inability to repeal Obamacare. Moving on to the UK. With the UK, we've had a number of data points coming out of the labour market. So we've seen UK unemployment now at the lowest level since 1975, and UK employment rate at the highest level since comparable records began back in 1971. But it's not all good news, because average real weekly earnings growth remains low. There we've seen that most recent release saw only 0.1% growth compared to a year ago in real terms. And this is now the lowest annual growth rate since 2014. Why this is important is that recent economic growth has been supported mostly by consumer spending post-Brexit rather than business investment, and it would be difficult for these levels of consumer spending to continue if we do not see wages growing faster than inflation. Looking at the week ahead, quite a few companies reporting, especially in the US. Just choosing one of them where we think there should be some focus, and that's IBM. What we'll be looking for is what management has to say around the growth rates of its strategic imperatives. These are its high growth and new investment areas such as cloud computing, data analytics, cybersecurity, and how this compares to falls in growth rates from its traditional core business areas. That's all for this week. Thanks very much for watching.